Hey, everybody, welcome back to another episode. I'm your host, Brandon Cobb, co-founder of HBG Capital. Excited. I've never had a guest on the show to talk about oil. If you've been listening in the market, if you've been keeping up with things, there's been a huge demand, a huge push to the oil sector. As you know, inflation has been at all-time highs. Energy has been the culprit. There's been a lot in the political news lately, the past couple of years around energy prices, and oil is at the center of that. So I've got an expert guest on the show today who's going to talk about it. His name is RJ Burr. He's a third generation producer of American oil. He funded his first partnership right out of high school within like 3 months. I can't wait to talk about that. He's focused on the Gulf Coast. He's deployed over 300 million in upstream development, and he's partnered with some of the name brand largest oil and gas companies. You know them: Shell, BP, Marathon, and done tons of development to develop several million barrels of oils in reserve. RJ, welcome to the show.
Hey Brandon, how you doing today?
I'm fantastic, man. We were chit chatting a little bit before the show. And like I said, I'm excited to jump in because it's been something that is on everybody's radar. Ever
Mhm.
since you had this huge wave of inflation, energy has been all over the board. It affects everything: grocery prices, transportation costs. I mean, literally, it drives prices across the board. And there's been this huge push to it. And I kind of want to understand why. And we're going to get into that. But before we do, for those that don't know who you are, what's your story?
My name's RJ Burr. I live in Bowling Green, Kentucky, home of the Corvette. Some people get to be the peach capital of the world. We get to be the home of the Corvette. And basically, oil's all I've ever done. My dad, I'll put it to you this way. A lot of people spend decades searching for their purpose in life. I knew mine at 7. It was the first time my dad took me to the field, took me to Luling, Texas. It was the middle of Texas summer, about 180 degrees out there. You stick your face outside and it melts. It's so hot. And we pull into Luling, and for anybody who's ever been in Luling, Texas, it has a distinct smell to it. And for those that don't know that smell, it doesn't smell great. And so you open up and you smell. I said, Dad, ooh, what's that smell? He said, Baby, that's money. It smells like
Money.
oil. Yeah. And when he took me out to the field and I saw the army of pump jacks, the horses that go up and down, first time I saw that, I was hooked. And it's all I really ever wanted to do. Graduated high school. And like I said, I got in the business. I made my first sale 3 months out of high school, and I haven't looked back. Now, when it comes to oil, I truly believe that one of the greatest disservices our education system's ever done is not teach people the role that oil plays in their life. Most people have no idea that oil, and it's not even close, it is the most important resource ever utilized by humans. The modern world was built on the back of oil. All plastics, oil. You have cosmetics, pharmaceuticals, everything that the modern world runs around. I truly believe you could randomly go to any country in the world, any modern country, and randomly grab one citizen, and they would have at least two products of oil on them, and most likely not even know it. All electronics, without oil, they don't work. And so it's just one that most people don't realize that when I'm giving a speech to a room, the first thing I ask that room is, okay, by a show of hands, how many of y'all have ever participated in the oil business? And inevitably, you're going to get a couple of them that raise their hand. And what surprises most of the rooms is when I look at them and say, hey, you realize every one of you should have had your hands raised? We're all in the oil business. Whether you want to be or not, we all pay for it. Now, what do we do as a company? We're one of the few avenues that allow you to turn that flow of revenue around and get it coming back to you, because
Mhm.
we all pay for it. And so that's really the main component of what we try to do right now. Look, we're good at oil. I could sit here and tell you all the wells we've hit. I could run the numbers. But the fact of the matter is, most people don't understand how important it is to your life and the benefits of getting involved in oil. If you get involved with the right people, man, it can be one of the best investments you've ever made.
Let's talk about that. What are the benefits? Well, connect those lines. If you could take us back and run a college course here in the next few minutes and explain how oil affects us in our everyday lives, how would you connect the dots?
Well, one of the I was up oh, it was about 2 years ago before Christmas. It was right, getting in the winter time. It was early one morning before everybody got to the office, and I'm sitting down planning out the end of the year. And it's the first time heck, I've never done it, hadn't done it since then, hadn't done it before that. I'm sitting in the kitchen letting my coffee brew, and I start looking around. I said, well, that was made from oil. that was made from oil.
Yeah.
And I started listing off all the items in the kitchen that were made from oil. And as I'm walking back to my desk, I was blown away. And it hit me. I said, hang on, Jay, you've been doing this 30 years. If this surprised you, how many other people have no idea? And that was the day we made a little movie. It's about a 5-minute movie. It's called A Morning Without Oil. And we just took a regular couple, showed them waking up in the morning in a modern, alarm clock, modern house. He said, hang on, guys, we're doing a morning without oil. We got to start this over. And we remove every product made from oil from their lives. And yes, it's a little spoof. Yes, we try to be funny with it. But the point we're making is without oil, we live in the Stone Age. And the reason oil well, you look at the tax benefits. We were talking about that earlier.
Hmm.
Uncle Sam does not give you those tax benefits because he likes you. He gives you those tax benefits because we have to have oil.
Hmm.
And so he lets the individuals who are willing to put their money out there and risk getting that oil, he allows them to write off a good portion of it. Now, I'm not a CPA. I can just give you a general rule of thumb. But typically, if one of our partners invests 100,000 in a drilling program, cash on cash, Uncle Sam's going to pay for roughly 35,000 of it. So they're playing on 65 cent dollars right off the bat. If I break them even, I've made them 35% on their money through their tax benefits. And so a lot of my partners, what they'll do is they'll utilize their money however they want the first 10 months of the year. In
Hmm.
November, they call their CPA and see how much they owe in taxes. And then they call me in December and cover it. And so now I'll go ahead and make this statement, make it clear. The tax benefits are not the reason to do oil. If you're looking straight for tax benefit, you're better off giving your money to the Boy Scouts. However, for me not to acknowledge the tax benefits and what kind of benefits they are, well, that would be ignorant of me, and that would cost people a lot of money if I didn't point out what they could do.
Right.
And so, make that statement first. The reason you invest in oil is simple. You do it for the revenue. You do it for the money, and so that's the fact that you get tremendous tax benefits at the same time is just a cherry on top.
Makes a lot of sense. I want to talk about more about that 65 cents on the dollar and utilizing the depreciation where it comes from. But before we do, recently there's been a huge push. So I'm in the real estate world. I track what people are raising money for, what assets in the real estate sector are doing really well. There's no surprise, like multifamily and commercial with the rise in rates have and the bridge debt it's caused a lot of distress. And it has a lot of capital that was deploying in those assets seeking yield elsewhere. And surprisingly, what I found is there's been this huge push to the oil and gas sector. Why is that?
Well, the powers that be, I don't know who they are, have been trying to convince the world for 70 years that oil is bad. They've been trying to move people away from oil. And the fact of the matter is, when you do the research, don't take my word for it. Get on the internet and do it yourself. There's nothing out there that can economically and feasibly replace oil. And so while they're pushing solar panels, while they're pushing windmills, while they're pushing all this other stuff, it's going to be inadequate. And when you look at the fundamentals of oil, well, look at demand. Demand is higher now than it's ever been. And 83% of the world is just now beginning to use oil, just now beginning to see the benefits that oil brings to their life, the modernization it brings to their life. What
What
do you think
countries
they're
are
going to
those?
do?
Who is that? You said
Oh, just
83% of
various,
the world.
just various third world countries. You just
Third world
that's
countries, they're hitting
yeah,
their industrial revolution, which is
yeah. They're
requiring a lot of energy, and there's no energy source out there, I'll bet solar, wind, whatever, that can equip them
well,
with what they need to
cheap
produce.
energy. Yeah,
Yeah.
and it's cheap energy. And so when you see these countries begin to see the benefit of it, what do you think their desire is going to be? Do you think they're going to say, "Oh man, we're destroying the environment. Let's go back to the Stone Age," or are they going to say, "Hey, this is kind of awesome to turn lights on in my kitchen," and they're going to
Mhm.
use more of it? And so you look at demand, and there's really no curtailing demand. And so, okay, so the next steps, all right, well, what does supply look like? Well, in 2013, worldwide, we invested right at $1 trillion in upstream development to find more oil to replace what we produced. Last year, that number was around 300 billion. And so you have a roughly 70% drop in worldwide investment to find more oil. Right now, we're currently running about 10 to 15 million barrels a day short. versus what we consume versus what we produce.
Mm-hmm.
They expect that number to be over 30 million by 2030. Well, if supply is going down and demand is going up, traditionally, what does that tell you is going to happen to the price per barrel?
Mm.
It's going to go up. And so then you look and say, okay, is there something out there that can replace it? Is there something that we can substitute for oil that would curtail us not producing enough?
Yeah.
And no, I mean,
There's
they're
nothing out
trying to
there.
replace it with old technology. I mean, not, and it's not to bash the environmental movement. I believe every one of us have a little environmentalist in them. I don't think any one of us want to live in trash. I don't think any one of us want to breathe polluted air. And
Right.
so for a certain segment of the population to grab the mantle that they're the only environmentalists, well, I call bull on them. I just don't agree with their solutions because their solutions don't work. They're implementing old technology. Like I said, we discovered the first solar panel 150 years ago. If they hadn't figured out how to do it by now, chances are they're not going to.
Yeah, it's gonna be
Now,
tough to do that.
well, I mean, now one day there's some kid living in his mom's basement right now, some wizard or smart. Some kid's going to figure something out. Somebody's going to come up with something that change. It just hasn't happened yet, and they're going to find a new source of energy. But until that day happens, it's oil. I mean,
Yeah.
and it kind of makes you wonder why. I mean, when you look at it, think of it this way: scientists measure a country's technological advancement. They measure that by how much energy that civilization, that country, whatever you want to call it, how much energy they can harness and utilize.
Mhm.
Well, that's the scientist benchmark on how technologically advanced a civilization is.
Yeah.
Well, look at what we do when it comes to energy, and look at what has been under attack since we began using it. Every form of energy that we generate energy with has been under attack, whether it be nuclear, whether it be coal, whether it be natural gas. They're
Mhm.
all under attack. When look at natural gas. Natural gas burns cleaner, burns hotter. We're the Saudi Arabia of natural gas. We have more natural gas than we know what to do with. We have so much natural gas that you actually flare it off on the well site if it costs too much to build a pipeline to produce it, and you just flare it off and produce the oil. That's how much natural gas we have. Most homes already have natural gas lines run to them. Every car you could put a converter on and run it on natural gas. You could run those pipelines straight to your garage. You don't have to go to the gas station anymore.
Mhm.
Natural gas checks every box environmentalists want to check, yet it's not an option. I wonder why. Same thing
Well,
with nuclear.
do you think that part of the reason why the supply has been capped, demand staying consistent and or growing? You said growing. I mean, the biggest takeaway I just took was 83% of the world is coming online is going to need an energy source, right? Oil is just a
Yeah.
natural, logical thing. So demand's going to grow exponentially. And I'm thinking more locally here in the United States, is the Biden administration put out the Green New Deal and reversed a lot of Trump policies. Trump was very pro energy, and in the spirit of doing better for the environment, Biden put in some policies. Do you feel like those policies had a direct effect on the supply, and that is part of the reason why you're seeing this opportunity and this move to the oil and gas sector, or does that not have anything to do with it?
Uh, no, well, really, that's a kind of a different conversation because everything politicians do, for the most part, is window dressing.
Hmm.
Because you're not going to affect the long-term price. They might do something to manipulate it in the short term,
Hmm.
but really the fundamentals of it. Now, whether you like President Trump or not is irrelevant. What he did when our production as a country got so high, he changed the power structure in oil. For 70 years, OPEC has been the group that basically set the prices.
Yeah.
Well, all of a sudden, we're producing so much oil that OPEC didn't have near the say they used to have. And so really what we saw coming is, for lack of a better term, we saw Saudi Arabia and Russia engage in an economic war against the US shale industry.
Uh-huh.
And what we envisioned happening is them flooding the market with oil and pushing down prices because most of our shale companies are highly leveraged, needing at least $50 a barrel to pay their bills. And
Mm.
so if they could push that price to 45, $40 a barrel, all of a sudden there's a lot of American companies that are in trouble.
Yeah,
Now,
bankrupt. Yeah.
the dirty little secret is they need $50 a barrel also. And so what we were betting on is that they would push the prices down. It would create a buying opportunity, but then they'd have to shut it down and bring the prices back up because it would crash them too. And so that's really when you look at all economic crises in our country's history, in every case, there's one or a group of people that come out of the other side looking like geniuses. And when you string their stories together, there's really only two common characteristics they share. One, when their crisis happened, they were liquid. They had cash in hand and they could make a move. Secondly, when their opportunity presented itself, they had the courage to push their chips in the middle of the table and make that move. And so we saw all this coming and we said, okay, there's going to be a crash. And so we had our powder dry. We had about 15 million cash in hand and we were ready to go. And then all of a sudden COVID came. And what COVID did was really, it didn't change the results. It just changed the amount of time it took to get there. We thought it'd take 12 to 18 months for all this to play out. COVID came in and crunched it down into 30 days. And that culminated.
What do you mean? Walk us through that. What do you mean? What crunched down into 30 days from 18?
When you had basically what we were watching is Russia and Saudi Arabia slowly pushing that price down and it taking a slow impact on these companies. Yeah. Well, then all of a sudden COVID came. And when COVID came, the world's economy shut down.
Right.
And so when they shut down, all of a sudden you had storage, you had basically future prices in oil. There's a bunch of factors that went into it. But all of a sudden you had a glut of oil.
Yeah. Went down to like $20 a barrel. I mean, something
went
insane.
Down to went to negative 40 a barrel.
Negative 40. Okay. Yeah.
And that was on April 20th, 2020. Now, what most people don't realize is the tremendous impact that one day had on American oil, because American oil is not your majors. American oil is not Exxon. It's not Chevron. No, American oil is roughly 9,000 independent companies that average 12 employees or less. We produce 83% of the oil. We produce 90% of the natural gas, and we drill more than 90% of the wells. And so what happened on that day when the prices crashed, first wave was that day, knocked out a lot of companies. You had some younger companies, you had companies on shaky financial ground. For whatever reason,
I want to just say something. What you just said, that was 83% of the U.S. oil production is not Exxon, Shell, or Marathon. It's produced by mom and pop businesses with 12 employees or less.
That's the average. Now, don't get me wrong. There are some very large independents out there.
Sure.
However, the vast majority of our production comes from these smaller companies.
Wow.
And so that's why the market crashing like that had such a profound impact on the industry, because all of a sudden, if it's Exxon, they can handle it. Yeah, they take the blow, but they keep on going. Yeah. A lot of these companies, put them out of business. Well, the next wave came a couple of months later when we sent everybody home for COVID. The companies that could pay their employees more than the government and get them back to the field, they made it. The companies that couldn't, a lot of them didn't make it. And so you had a clearing of the playing field like we've never seen. And so it was one of those
an opportunity now to jump in and gain significant market share because
COVID
wiped a lot of people out. Okay, got it. All right, so that's what's partly caused this demand, right? So there's a lack of available competitors to drive up the amount of supply, and right now it's a heyday. Who can get in and start producing is going to have a larger share of the market. So that answered one of my questions, which is what's kind of driving this demand.
And the other side of it on the real estate side of it, when you have, because a lot of my partners are real estate investors, and when you have an individual that has a property, and I believe everybody can acknowledge prices have gone through the roof everywhere for real estate. Well, if you sell that property right now and you want to 1031 exchange it into another property, or you want to just basically buy what are you going to replace that property with that's going to go up in value? There's a lot of stuff that it's maxed out. It's got to go back the other way before it starts going up again. And so you had a lot of real estate guys that, well, heck, if I sell this property, what am I going to put that money into? My partners, they live from what I call the three S's. They live from three piles of money. The first pile is their sacred pile. That's a pile they pay their bills with. They take care of their family with. Nobody touches that pile of money. The second pile is their safe pile. The safe pile is where they put their real estate, where they put the silver, where they put their gold. They put the money there. Don't get me wrong. They want it to grow, but it's more important to them that when they go back, just as much or more is there when they left. That's their safe pile. Well, their third pile is their speculation pile. That's the pile they want to make multiples on. 2 to 1, 3 to 1, 5, 10 to 1 on your. That's the money they play with me. Well, I had a lot of partners that had a lot of money in these safe piles, and all of a sudden they realized they weren't so safe. I had a
Mm.
couple of partners that had several million in gold certificates or in silver certificates. And then all of a sudden they realized there's more actually paper than there is silver.
Yeah.
All of a sudden their safe pile was just as manipulated as everything else. And so when all of this was going down and the markets crashed, well, since that day to now, we've made 23 different acquisitions. We've secured what we believe about 100 million barrels of oil, and well, we're developing the oil now. And so fill that information in there. I'm when my partners have a problem, I have an issue. I have a problem, and so I'm trying to think of my partners who are freaking out over this silver. What can they do? And all of a sudden, it hit me one morning. It was about 3 in the morning. I popped up out of bed. I scared my dog. It almost bit me. I scared my wife. Ran down to the office. She goes, "What are you doing?" I said, "Baby, I've got it." And so I run down there and I start running numbers. And she comes down the next day. She said, did you figure it out?" I said, "Yeah, I figured it out." She said, "What do you mean?" I said, "Well, let me ask you this. What is the one product on the planet that everybody has to have? It has a fair market value, and there's a demand as far as the eye can see for it." She said, "You're talking about oil." I said, "Absolutely." Now, if we weren't sitting on the oil, we'd be having a completely different conversation. If I was
Yeah.
guessing when I drilled the wells, that's a completely different speculation question. However, with us sitting on the oil, we've had 10 and 11 wells we drilled for our partners in this field over the last 2 years. We got another 200 to drill to develop the entire reserves. And it's proven reserves. We're awesome. So I look at it, I was like, well, heck, if you're tired of having your money in the rat race, because I can't make sense of the stock market, I'm sure there are guys smarter than me that can, but I'm looking at companies that should be crashing that are going through the roof. I'm looking at companies that should be going through the roof that are crashing, and I just can't make rhyme or reason out of it. Well, if you want to get your money out of that rat race and put it in something that you know is going to have a value when you get it out, what better product than oil? Everybody has to have it. And so, really, with what we're doing now, and there's no guarantees. Please understand. If anybody ever calls you and guarantees you something in oil, they're lying to you. There's only the good Lord above knows exactly what's going to happen when you drill those wells.
Yeah.
And so you can build all the data. So let me preface it by saying that. But I truly believe the biggest risk our partners face is the mechanical nature of drilling the wells
Hmm.
because we have too much data. And so my guys, when they look at it mathematically, the biggest question they have to answer is when these wells produce, when they put in $1, are they going to get $2 or $3 back? Or are
Yeah.
they going to get $10, $15 back? Because right now, the last 5 partnerships we funded in the field we're in, they're going to average right at 4 to 6 to 1 on their money.
Mm.
Now, I don't know what
Let's
else out
talk
there
about
does it.
that. So let's get into the investment side of things. Let's talk about
Okay.
the depreciation benefits. Let's see how this to connect the dots here. The way I'm seeing this is so capital's raised, and now that we know that there's not 4 or 5 major players like Exxon or Shell or Marathon that's running the market, it's 12,000 or I can't remember the number used, like 9,000 of these 12 employee or less small
Mhm.
businesses. My assumption is that there's these funds that go out, they raise, and they partner with operators who are really good at drilling and extracting oil. Very similar in the real estate world. You got people that have
Mhm.
funds and they're looking for the operators that control the apartments, control the developments, build the houses. Same thing. There's a partnership there. Capital is married to the operations. Sounds like it's very similar in this world. You get the capital that's married to the operations. You're the capital guy. You're partnering with a lot of these mom and pop operators. You just named one of the risks, which is the ability to go out and drill. Walk us through some of the other, risks when it comes to, investing in oil. And then what are the benefits? I know depreciation is a huge one. That's tied to the equipment. I know the equipment kind of wears out pretty quick from what I've heard, right? Somebody on the outside looking in. What are some of those risks? And then what are some of those benefits that investors need to know about?
Well, risk is very simple. The oil's either there, or it's not there. And when you drill the wells, if the oil's there, you're going to make money if you can produce it. If the oil's not there, you've lost it right off the bat because there's nothing to produce.
I
And
see.
so, really, that one of the hardest parts about oil and gas is reading through the fluff. As we were talking before the recording, when you have an industry that has so much profit built into it, it's going to bring bad actors. And so the number one thing I would tell anybody looking at oil and gas is make sure who you're dealing with.
Mm-hmm.
Kick the tires before you jump in and buy the car. And that's a key to anything. You take a
How does somebody
something.
check the tires before they buy the car?
I tell everybody, search me on the internet. Pull me
Okay.
up. I mean, I do all the research you can. My dad, one of his favorite ways is, boy, you tell me how long you had your phone number, I'll tell you how trustworthy you are. You know, and so that's it. I've had the same phone number for 25 years, and so it's just something that make sure that you're getting involved. I tell people there are three factors involved before I'll do business with anybody. The first factor is the investor's responsibility. The second two factors are my responsibility. The factor that is theirs is the money. I can't tell them how much they have, and I can't tell them how much they can invest. Our programs are Reg D 506C offerings. That means every partner has to be an accredited investor. And typically our partners will put anywhere from 100,000 to $500,000 in our deals. And some go more, some go less. It's just real, but it's whatever's comfortable for you. But once the partner tells me their money is not an issue, I'll put a positive next to that and we won't address it again. Now it goes to me and my two factors. First and foremost, who are we? J. Burr, Panex, the Burr family. Why are we people you would be proud to know you're working with? If you couldn't envision yourself breaking bread with me and my family, I'll be the first one to tell you, don't do it. Now, once you see that we're the kind of people you want to do business with, now what can we do for you economically? What are the benefits of investing in our partnerships? You mentioned tax benefits. Well, oil and gas can take 100 different forms when it comes to people putting their partnerships together. What we do is basically we educate our partners on what we're doing, why we're doing it, and what the results would be. Prime example, we love salt domes. Most people now, and I won't get in the weeds
Well, what
and
was that word? It was kind of hard to hear. What was it?
salt domes.
Salt
We love
domes.
salt domes. Yep.
Okay.
Basically, a salt dome is a big body of salt that started way down deep and pushed up towards the surface. And it created traps. And that's, like I said, I won't get in the weeds, but it's basically your salt domes were the original oil formations. Back in the Wild West days of oil, salt domes were the first formations that geologists could identify.
Okay.
Well, a lot of your old oil companies were about like spoiled kids, and that their favorite toy is their next toy. And so what they would do, they'd go out, they'd drill a well, they'd hit it, they'd cut back flips their oil men. Well, over the next couple of years, they drill 40, 50, 60 wells directly around that well. And then all of a sudden they drill a well a couple of miles away and hit it over here. Well, heck, we produced all the oil here. They just pick up their operations and move over there. Well, how many of those fields did not get completely developed? I would love to say our philosophy is much more complicated, but we stand on the shoulders of giants and get what they left behind. Like the field we're in right now, the Choctaw. When you hear people talk about the Strategic Petroleum Reserve, that's our salt dome. We own the roughly 3,000 acres surrounding it. And when you acquire a field, the first thing you want to do is pull all the data on the field. You want to pull every well data, because when you drill a well, when you finish drilling, the first thing you do is you log the well. You take a geofoam, you run it down your open hole, and it tells you what's in the well. From the mid 40s till to now, that's what you do on every well. Well, the beauty is, yes, our logs today have a few more data points. And when we print them out, they're prettier because our computers and printers are better. But the basic root data, the resistivity, the permeability, the porosity, is the same data they were acquiring in the 40s. And so you can take a log from the 40s and look at it, and you can see exactly what you would see today. And so and now the crazy part is those logs are all public information if you know where to look.
Yeah.
And so when we acquired this field, the first thing we did is we pulled 40,000 different data sets on this field. We pulled every well log we could find to every well that was drilled. And the reason you do that is you're looking through these logs, you're building a field profile. And like on the Choctaw, the average successful well in the Choctaw will have anywhere from 3 to 7 different pay sands, different layers that pay, and have anywhere from 500,000, give or take, to 1.5 million, give or take, barrels of oil in it. That's your average successful well. And you're looking at the logs, you see beautiful stacked pay sands. I mean, you can see them on the logs. You pull the production reports. Oh, okay. 1 million barrels of oil. Beautiful stacked pay sands, 750,000 barrels of oil. Well, then all of a sudden you'd see a log, beautiful stacked pay sands. And when you pull the production report, you see 30,000 barrels. You go, I wonder why. So you earmark that one and set it aside. Keep going through. All of a sudden we saw another one. Beautiful stacked pay sands, very little pay. By the time we were done going through all of this data, we had several dozen of these logs that were beautiful logs. These wells should have had 500,000 to 1.5 million barrels of oil in them, but they had very little production. And so when we went back through and researched, we figured out these guys had two problems. One, for whatever reason, whether it was ego, whether it was their boss, we're not sure. They wanted to produce these wells as hard and as fast as they could. When they hit them, they turned them wide open. Well, the area we're drilling in, you hear people talk about fracking a well. What fracking a well is you drilled into a hard rock. You drilled into something that does not have channels that the oil can flow to get to your drill casing, to get to your drill pipe. So what you do is you take a cocktail of chemicals, you mix it together, put it in that casing, and push it down that hole in high pressure. And what you're doing is you're trying to bust that rock up. You're trying to create channels where the oil can flow back to your casing. Well, that's fracking. That's the exact opposite of what we do. We drill into basically a beach. And when you produce this oil, it produces sand as well. Think of it this way. You have a big gulp in front of you without a lid, without a straw, filled with crushed ice and Coke. And all you want to drink is that Coke. You don't want any of that ice in your mouth. But when you drink it, you've got to block it with your lips or your teeth and gently drink it just to get the Coke. Does that make sense to you?
Makes sense, yeah.
Okay. That's how you have to produce these wells. When they come in and basically turned it wide open, that's essentially like them taking that big gulp and just pouring the ice and Coke and all. Yeah, they're going to get a lot of production right off the bat. But then all of a sudden they look up and their beautiful wells turn into a 5,000-foot column of cement. At that point, they had one of two choices. They could either drill a brand new well and try to do it again, or they could walk. Most of them walk. All we do, and that's all we do is find these logs. We go back in and we drill a well right next to where they told us the oil was at.
You set it up the right way to get a slower
And,
production, but
now
you're
we know
able
how
to
to
get
deal with
production.
it. Now there's technology to deal with the sand. Now you screen and gravel pack the well. Now we know how to do it. And so essentially, these guys paid the money to find the oil, paid the money to drill the wells, paid the money to produce it to show you can get it out of the ground, and then they just left it there for us to go and get. And that's all we're doing. Now, right now, if we're right on this Choctaw alone, we're sitting on about 100 million barrels. It's $70 oil. That's $7 billion. There's over 200 wells we'll need to drill to develop this entire area. And so if we're right, it'll probably cost us anywhere from 300 to 400 million to drill all these wells. Mm-hmm. If we're right, we'll turn that 400 million into 7 billion. If we're wrong 5 times over, we still turn 300 million into 350 million.
Yeah, there's a lot of upside potential. Your biggest risk factor is that barrel price of oil going up and down, essentially.
But that's also one of the biggest benefits, because how you produce these wells is you don't produce them from the best zones first. You produce them from the deepest zones first. And the reason being, once you go up, it's very hard to go back down. Say you produce the third from the bottom. Well, you're done producing that third from the bottom. You got to set a bridge plug above and below. You got to cement it. You got to isolate the zone off. Well, if you want to go below that, you now got to bring a drilling rig back out, drill through that plug, and go down to the bottom. Well, you stand more of a chance to lose your well by doing that than getting back to those deeper zones. And so to avoid that, even if they're not the best zones in the well, you'll produce from the deep and go up, because otherwise you wouldn't produce that oil. We just hit a well that has 8 different pay sands in it. By far the best looking pay sand is the fourth from the bottom. This sand looks like it'll produce 2, maybe 300 barrels a day. Well, there are 3 pay sands below it. These 3 pay sands, when we look at the reserve report, they should make the partners about 2 to 1 on their money. Mm-hmm. Well, do we go to the big sand and hit it first and forget that 2 to 1? Or do we go and start at the bottom and produce that? Well, we went to the bottom and produced that. Well, we won't get to that big zone for another 10, 15 years. What do you think oil prices will be 15 years from now?
No.
So all of a sudden, we hit that big zone over a 10, 15-year period. These partners have made 2 to 1 on their money. And then all of a sudden, they're making 100% annually on an investment they made 15 years ago because oil prices are 120 a barrel. Oh, we do what some of these morons in DC want to do. Prices are going to be $200-$300 a barrel. Mm-hmm. But that's what these wells do. They produce for a long time. and they generate. Like I said, if we were speculating on whether the oil was there, we'd be having a completely different conversation. But right now, I'm looking at it. The only thing standing between us and getting to where we want to be is having the ability to raise the funds as fast as we need. Because that's right now in our office here, we got basically two guys that do the funding. And between us, we'll handle anywhere from 20 to 30 million a year in direct participation programs. And that's pretty good. However, that's going to take us 10 years to drill all of these wells, which is
Yeah.
fine. I'm not sweating it. We can do that's what we're going to do anyway. However, the reason I reach out and I get on podcasts like this is, heck, there's enough of this pie for everybody to get a big old piece.
Yeah.
And I believe that somebody is going to consolidate this American oil. COVID taught me a big lesson that if a country doesn't control its food, its medicine, or its energy, somebody else does, and you're in trouble.
What are the
Right now,
depreciation benefits? I'm curious because that's a huge thing that I hear being touted in the oil industry. I've heard some crazy numbers. How does
well,
the depreciation work, and what can investors expect?
on the it's more your depletion allowance because the partners don't own the equipment, and so they're really not going to get an appreciation on the equipment unless you actually purchase the equipment.
Okay.
The big tax benefits in oil and gas are right off the bat your intangible drilling cost. That's your year one deduction. You're going to get roughly about 90% of your total investment. The remaining 10% will be over the next handful of years. And then 15% of your income will be tax free for your depletion allowance. And so those are the real in your drilling programs, those are the main tax benefits. But like I said, it's an above line deduction. If you make $500,000 this year in income and you invest 100,000 in a drilling program, Uncle Sam's going to look at you like you now made 410,000 this year. Cash on cash, it's going to be about a $35,000 tax break per every 100,000 you invest. And that's the main tax benefit. And that's why, I truly look at it. I tell my partners, look, if you're sitting in a position financially where you can make investments and you're paying taxes, you're making a mistake, especially when you have a vehicle like this. There's no reason for you to pay taxes. Put your money in the drilling programs. You're going to get it back through the production, and you're not going to pay those taxes. You send it to Uncle Sam, that's a true dry hole because he's not going to send it back to you.
Yeah. I love it. Love what you guys are doing, going after the areas where you've got those salt domes, going after areas where there's been past performance, but they went about it the wrong way because the tech just wasn't there. Tech's pulled around. Love how you're mitigating risk. RJ, this has been a fascinating conversation. If people want to learn more about you, learn more about your fund that is investing in these assets, where can they go?
Oh, easy. You can email me directly, RJ Burr at panx.us, or we created a website, panx.us/learn, that was designed specifically for individuals who've never done anything in oil before. We have Oil and Gas 101 in there, just gives you a basic foundation of oil knowledge. Oil and Gas 102 basically breaks down the tax benefits. There's videos where this is your money we're talking about. If you're not 100% comfortable with who we are and what we're doing, don't do it. Don't even entertain it. Now, on the other side of that coin, if you do see that something that generating tremendous tax benefits and getting involved with people that this is all they've ever done, and we're pretty darn good at it. I know hyperbole has killed more sales than anything else. And so you don't want to get up here and pound on your chest and say, I'm Godzilla, but my family's, we're pretty good at this. And if you just like to see what we're doing, I truly believe whether it's with us or somebody else, if you don't have a portion of your portfolio in oil and gas, I think you're making a mistake.
Yeah, great diversification play. We'll make sure that gets posted in the show notes. RJ, it's been an absolute pleasure. Thanks for coming on the show today.
Brandon, I appreciate it.
We'll see you guys next time. Thanks for listening.
Have a good one.